For the next hour, you'll be leaving the Show Me state and entering the Show Me the Money state. So stop what you're doing, grab a pen, and get ready to learn. Randy and Jake Floyd of Floyd Financial Group will be your guides for straight talk and honest answers about living the life you deserve in retirement. So prepare to be empowered. Now, here are your Show Me the Money hosts, Randy Floyd, Jake Floyd, and Jeff Shade.
Good morning and welcome to Show Me the Money with Randy and Jake Floyd, the radio show that gives you the straight talk and honest answers you need to help you reach your wealth management and retirement goals through smart investing and careful planning. My name's Jeff Shade, and as always, I'm just here to ask the questions. But of course, the words of wisdom and solid advice, you know where they come from. It's Randy and Jake Floyd at Floyd Financial Group. I'll start with you. Randy, how you doing this morning, my friend?
Doing very well, Jeff. How about you?
I'm doing great, thank you. And Jake, how's this Saturday morning finding you, my friend?
Very good, very good. I want to start the show off by saying Jesus is risen and there's no one like him.
That's right. And I don't know where we ever got these Easter bunnies and eggs and so forth as far as Easter goes, but I hope people don't forget the real meaning of Easter. So happy Easter, everybody. Let's start off with some current events. And I understand that there's this thing called a bond auction. I didn't know that you could auction bonds.
Yep, bonds are auctioned just all the time. It's not normally something that people see in the main headlines, but if you're watching markets and things like that, it comes up from time to time. And so there's something like 60, I think the number 67 billion up this past Tuesday. So there seems to be no
hesitation.
Yes, or subsiding of appetite for U.S. debt. Kind of crazy.
Yeah.
And here we are, we're 34 trillion in and we're still issuing bonds. And of course, here recently too, we got the new budget to stop us from shutting down the government of 1.2 trillion passed to support us through October. So, debt is alive and well across the globe.
I got to be honest, I was hopeful that this Mike Johnson guy would be better than he seems to be. He just seems to be more of the same, unfortunately. I was very optimistic when he replaced Mr. McCarthy, but I don't know. I'm not sure he's that much different.
Debt seems to be the American way, at least with the American consumer. I mean, I'm still seeing consumers racking up credit card debt at 25% interest rates, so why shouldn't the federal government be any different?
Yeah, that's true. We are seeing a little crack in the armor, though, of the credit card companies. Did you see that there was a 20-year lawsuit that had been filed against MasterCard and Visa by merchants saying they were overcharging and that sort of thing. And they did lose, and they are going to have to now, when you charge something on a credit card at a store, the merchant has to pay a certain amount, somewhere between generally 1% and 3%, depending on what credit card service they're using. Well, they have negotiated a deal that they won't change any of those internal rates or raise them or change them for a full 5-year period, and they have reached a settlement. Now, I would think it's been 20 years, so probably some of the people that are entitled to something are dead and buried and pushing up daisies by now.
Oh, yeah.
Yeah, sounds like something that some lawyers are going to become billionaires off of.
Oh, yeah, absolutely. Well, these days with small merchants, I'm finding that increasingly many of those small merchants are charging an extra 2% fee if you use a credit card. So, they're getting their money one way or another, but I know what you're talking about.
For sure. And I would say this. It's one thing for Visa and MasterCard to charge interest. It's another then, though, to after you're charging what would certainly be called usurious amounts of interest, to go ahead and then slap it on the backside for the merchant as well, who actually is giving you the opportunity, if you're Visa and MasterCard, the ability to charge people interest. And then here you are, you're whacking me over the head for it.
Yeah.
That kind of reminds me of a video I saw the other day. There was a guy at a rodeo, and this bull had just got done bucking somebody, and they were trying to get him back in the outshoot there, trying to put him back away.
Right.
And as the guy was going in, this guy thought he was going to be macho, and he comes up and smacks this bull on the butt right as he's going in there, and it rears up and kicks him both back feet in the face.
Oh,
and
my
knocks
God.
him back about 15 feet.
Whoa.
Yeah, you mess with the bull, and sometimes you get the horns, but sometimes you get kicked in the face.
You get the back feed. Yeah, I know what you're talking about.
Oh, man.
All right. Well, let's continue to talk about current events here. Bond auctions. Next is rate cuts. I understand that Jerome Powell spoke last week. And what is your feeling on what he said and whether or not we're going to have rate cuts this year?
Well, basically, he had alluded to the fact that, even though he's not getting inflation quite where he wants it yet, he's still planning to cut rates 3 times. And
3 times?
Then, a lot of people say, well, what does that mean? Is that 325 basis points? I would say most likely, yes. I don't see much more than that. But anyway, I heard an analyst on Tuesday morning from Morgan Stanley got on there and say, nope, what's priced in right now is 1.25% in rate cuts for 2024. If that's the case, we've been watching this market run here pretty good the last little bit. If that is the case, and if people actually believe that, then that does give us a lot more push for a higher market looking forward.
Randy, I think that this is some evidence of some of the things that you and I have suspected for a while, which is that this may be kind of orchestrated in order to bring interest rates down at the time when we need them down, so that we can refinance all this $35 trillion worth of debt, so that it doesn't eat us alive in interest service, right? He's saying, hey, we're going to cut rates no matter what, pretty much, which is not something any Fed president has ever said, to my knowledge. I can't ever remember reading about any Fed member showing his hand in that way. The only time I can think of that's maybe close to that was when Ben Bernanke was trying to revive the U.S. economy post-financial crisis, and he said basically, we're going to start printing all this money. But, especially when the market's at all-time highs or very near all-time highs, to say things like that is very interesting to me, because the extra liquidity of the stock market going up works against their overall inflation dilemma. I don't quite understand what he's doing there, as far as it doesn't seem to make sense, other than the fact that we have to get this debt service, the interest on our debt needs to go down.
The inflation goal is about 2% for the government. Where do we stand right now, and does it look like we're making any progress on this?
Well, based on what we saw during the last CPI and then the PPI, so the Consumer Price Index was hot at about 0.4 month over month. And then the PPI was even hotter than that. That's the Producer Price Index, which drives the CPI. CPI has to, right? Because the producers have to make it before you can sell it. And if their price is driven, it's going to be driven to the customer.
It's the American way.
Yeah,
right,
exactly. So, I think Jake is right. I mean, we're looking down the road here, and we know we've got lots of debt that has to be refinanced. As some of these bonds and things come due and we have to refinance, we really can't afford the interest at 5%. And so, again, it's one of those times we're going to go back to this old adage here in a minute, that this time it's different. I'm not so sure that's true. As we've looked back over our shoulder here we've been talking about this the last couple of months, that, interest rates on homes at 7%, while it seems egregiously high right now, historically is about average. Mm-hmm. So what happened was we got hooked on crack cocaine called zero interest policy.
Right.
And then we went through the 12 steps, and now we've relapsed. No.
We're back where, it basically should be. Like you said, if you take a look at historical interest rates, 6-7% is pretty good. I mean, we talked before about the early 80s being like 18%. And Randy, when you got your first house, what was it?
Yeah, I paid 10.25% interest and thought I'd died and gone to heaven to get that, so because everybody else was paying much, much more. I heard, people paying 15%, 18% and stuff like that. And I'm thinking, oh my goodness.
We're talking with Randy and Jake Floyd, Floyd Financial Group. We're talking about current events. We've talked about the bond auction, rate cuts, durable good orders. Where are we with the durable goods orders?
Yeah, so last Tuesday they published the durable goods, just snapshot to kind of see where we were month over month. So we were light in January, and then came back robust and really strong in February at a 1.6% growth. I think it was 0.4 in January. So we really saw a lot of strong growth. So what does that mean? So what it basically means is the consumer is spending money on what we would call long-term durable goods, which generally cost more. It's not a service that you buy and is gone. It's something you're going to buy and it's going to be with you for a while. So durable goods orders being up really kind of indicates a strong economy looking forward. So that kind of brings us to the next point I want to talk about. And, this market trend that we have seen since really October of 2023 has been quite incredible, what we've seen happen. Looking back over our shoulders, we've had since 2020 and the advent of COVID, we've been down, we've been up, we've been down, and we've been up, and now we're really up. So what does this mean? As long as earnings, I think, at the corporate level hold out, that's a good thing. if unemployment doesn't get too far out of hand, and this is something we're going to be watching very closely because we're seeing a lot of stuff out of the tech sector. They overbought in during COVID and this work at home thing and technology. And we're seeing that their headcounts are having to be reduced so that they can maintain profitability in some of these companies. And again, looking back to where, looking at all of the metrics and all the things that are out there, it's easy for people to say, this is just not like before.
Right.
We've just never seen this before. And I got to tell you, I don't think that that's true. I think that it is pretty similar to where we've been before. And I think this brings us to a couple of key points I want to make. One of those is this. We always have to be looking when we get to retirement or we're nearing retirement or any time really, but especially if you're close to retirement or in retirement, we've got to always be proactive. We got to be looking at where are things going, where have we been, what are the indicators that we can see that predict maybe where things are going in the future. But the hard part of this, Jeff, is what? It's the timing of these events and how does it actually play out. So we got to be proactive. We've got to be diversified. We've got to have somebody watching. We've got to have a certain amount of protection, especially as we get into retirement. And last, we still have to have growth. So right now we have this conundrum that's kind of out there where people now for the first time in a long time are able to get good fixed interest rates, 4.5%, 5.5%. And then they look at the market, and the market, really since October, haven't done the math here recently, but it's got to be up probably 20% since October 23rd of last year. So people are right now going, okay, so is it time to jump into the market? Some people are saying yes. Other people are saying, well, they know they're going to cut rates, but they haven't done it yet, so I'm going to ride this 5% a little bit longer. So what's really important here is that you have somebody at the helm that's watching what's going on and giving you guidance in your portfolio and watching out for your best interest on a daily basis. And I got to tell you, it is a daily thing right now to interpret what's going on because everything is so volatile. And oh, by the way, let's throw into the mix that we now have a presidential election.
Yeah, I was going to say, considering all the things that we've talked about here and factoring in the presidential election coming up this year, too, what is your prognostication? How do you feel about the direction that we're going? Are we making proper headway, and are we doing it fast enough?
Well, that is the question.
That's the $64,000 question. I just thought I'd throw it out to you because you have an answer for everything else. I figured maybe you have an answer for that one, too. I mean, I'm seeing some progress here. I feel hopeful. My sentiment is up. How do you feel about these things?
Jeff, I find in general that I'm a little more optimistic than a lot of people in this area. I think there's a lot of people that are fairly negative on the outlook, if not very pessimistic on the outlook. I think that we've been in these situations before, not this exact situation, but we've had situations where we had what I would consider to be a tyrannical president, kind of exerting his will on society. But we got through it before. I think we may get through it again this time. I mean, I do agree that the situation is dire. However, I do think that there are several ways that we get out of it. And when we get to the other side, I think times can be good again. We just need to make sure that we're doing our part as citizens, making sure we're going out and voting every chance we get, making sure we support those who want to bring freedom back to our country. I think if we do that, I think we're going to make it through this too.
America is resilient and Americans are resilient, and I have every faith that we're going to get through this too. We're talking with Randy and Jake Floyd here at Floyd Financial Group. We've been talking about current events, and if you like what you have heard, you'd like to sit down and have a personal conversation with these gentlemen about your own individual situation, we're offering a no cost, no obligation, and no judgment retirement review. To get yours, call 417-889-7233. There is no cost, there is no obligation for this, and certainly there is no judgment, just a casual conversation in a no-tie zone for you to ask the questions that you need to get answers to put you on a path towards a confident retirement. Once again, there's no cost for this. It's not going to cost you a dime. Why wouldn't you give it a call this weekend? All you got to do is call 417-889-7233. Leave your name and telephone number, and Ashley will give you a call back during the week to set up an appointment for you to talk with Randy and Jake there at Floyd Financial Group. Once again, that number 417-889-7233. You can also find out more about the firm online at floydfinancialgroup.com. It's floydfinancialgroup.com. Time for a break, gentlemen. When we come back here on Show Me the Money, we're going to be talking about 5 signs it could be time to look for a new investment advisor. All that and more when our show continues here on 104.1 FM KSGF, where Springfield comes to talk.
Ready for another helping of some more real money talk? thought so. Now, here's another serving of Show Me the Money with your hosts, Randy and Jake Floyd, with Jeff Shade.
Welcome back, everybody. This is Randy and Jake. You're listening to Show Me the Money, and in this segment, we're going to be talking about the 5 signs that it could be time to look for a new financial advisor.
What do you do when you and your financial advisor are no longer on the same page? I mean, if you've been with your advisor for a while, you're thinking about making a change, we're going to be talking about some 5 signs that it's finally time to fire your financial advisor and a simple way to find a new one. And I think you know what that is. Let's start with number 1 here, and I think this is the most important on the list. If your financial advisor does not identify as a fiduciary, I think you should probably head for the hills. What do you think?
If you're a hammer, everything looks like a nail, right?
Yeah, I would not be the financial advisor you would want. I'm trying to sell you something, and it doesn't make any difference what you need. Yeah, I get what you're saying.
Yeah, so I think that it's important that people understand that if you take a myopic approach to your financial future, it's not going to serve you well. And people would know that if they just kind of look back over their shoulder. You know, interest rates go up, interest rates go down, markets go up, markets go down, bond yields go up, bond yields go down, real estate goes up, real estate comes down, financing costs more, it costs less. And here of late, you know, real estate fees are up in the air. Who knows what's going to happen with that? But everything changes all the time. And so there's no one financial tool that works. The other thing I would say is you need someone that has been in this business long enough to where they're not looking for every dollar that's not nailed down.
Right.
And what I mean by that is what their motivation is just simply how much do they get paid.
Right.
And how do they get by? They need to be able to be a fiduciary, and that is to put your interest as the client above their own. And that just comes with time, experience, and depth of knowledge. And then the idea, too, that you believe as an advisor and as a company that it is your legal and really moral obligation to try to do what's very best for your client.
Right, and this obligation, I think, helps limit a conflict of interest here. But yeah, if you're not dealing with a fiduciary, like you said, if they view you as a nail and they're a hammer, probably you should look for somebody else. So being a fiduciary, I think, is the number 1 there. And if you ask them if they're a fiduciary, after they ask you what that is, they'll probably say, well, of course I'm a fiduciary. Why would you ask that? But all fiduciaries are not created equal. Some people can say that they're a fiduciary, but really they don't act in that ethical way.
Yeah, so one thing I would caution people on, too, is just because it may be a name you recognize does not necessarily mean that person's acting in their fiduciary capacity to you. I'll do this by just this case in point. Back during the financial crisis in 7, 8, and 9, there was a guy by the name of Lloyd Blankfein that ran Goldman Sachs, one of the largest investment banks and vendor of financial products on the planet. And he said when he got in trouble for betting against the investments he had just sold his clients, one of the questions was, how can you do that as a fiduciary? He said, well, you have to remember, we were not acting as a fiduciary in that case. We had parsed that out and we were acting as a broker-dealer, and all we had was a suitability standard, not a fiduciary standard to fulfill. Now, in the end, Goldman Sachs did end up paying fines for that. But I'm just saying that sometimes we have people that have 2 different hats they get to wear as far as a fiduciary or that broker-dealer hat. Again, it's just one of those things where you'll be able to tell pretty quickly. If you sit down with somebody and you say, hey, are you a fiduciary? And as you're talking to them, it's going to become pretty obvious, I think, really, as you ask them questions as to what their motivation is and what they're really looking to do. I would be looking for an advisor that is solution-oriented, but not myopically oriented to one product or service that makes it work.
Right, and I call these big box financial advisors the ones that you see on the side of buildings all the time. They're chains all across the country, and I think that when you go to them, they have a responsibility certainly to you, but they have a bigger responsibility to the company and to make the company profitable and to sell what the company wants them to sell. So I think that's something to consider. And with Floyd Financial Group, you would be an independent as opposed to a captive advisory firm in that you can choose from all different investment products. So that is one of the signs that it could be time to look for a new financial advisor, is that if they're not a fiduciary. Next one is if you say something to them and they say, well, that does, let me just handle this for you. They dismiss your input.
They dismiss your input, or they forget whose money it is. This is a really big one that I see a lot, where a client comes in and says, hey, I was thinking about redoing my bathroom and yada, yada, and I want $20,000. And the advisor's like, no, this isn't a good time. Don't take the money out. And it's really them self-serving. This kind of goes back to being a fiduciary, right? But they also seem to forget whose money it is that they're managing. And so I think that's a lot of the reason why sometimes they dismiss input of their clients. And so that's something I never, ever want to lose sight of, is that, I am here to bring value to my customers and my clients. And it is their money, and I am simply trying to help them in any way I can, including helping them spend that money on the things that they want in the most efficient manner possible. Sometimes I have clients that come in and say, hey, I think we ought to buy this stock or that stock, or we ought to do this investment or that investment. And we always sit down and talk about that. Now, sometimes we do go ahead and do that. Sometimes after I explain why I don't think that might be a good idea, depending on what it is, that we might come to the conclusion that we might not want to do that. However, it's my job to guide, and it is their money. Meaning, if they decide they want to do that anyway, that's perfectly fine, and I will help them do whatever it is that they want to do with their money. And so I just wanted to kind of lay that out there because, again, a lot of advisors do not view it that way, where they just, at all costs, they want to hold on to the money because that's how they get paid.
So the final decision rests with a client, and as you said, you make recommendations, but, they don't always follow those recommendations. It's their money, certainly, and they can spend it however they want. But it's good to know that you do pick apart the options and that you do listen to what your clients say. The next on our list of reasons why it may be time to look for a new financial advisor is going to be that they're difficult to reach. You just can never get a hold of these people.
I have to chuckle on this one a little bit, Jeff, because this just happened yesterday to me.
Really?
Okay.
Yeah.
This lady sits down and she pulls out this statement and she shows it to me. She says, I should have changed this a long time ago, but I can never talk to this guy.
Wow.
When I do, he just says, no, don't change anything. So it's just so funny that this came up today this way. You could tell she was frustrated, and she said, here's the challenge. She said, I get my statement once a quarter, and every time I get it, I think I want to go in and change this. But then I think about my last experience and how I couldn't get anything done, and so I just put it off till next time.
And I think that's a very honest answer to a problem that probably 50% of the people with advisors have, where they feel like that they cannot ever get a hold of them, they can't get an answer out of them. And I will suggest to you, part of the reason why they can't get the answers out of them is sometimes because the advisor doesn't know the answer.
Right.
There's a relatively low bar to become a financial advisor. And just because you can pass a Series 65 exam does not mean you know what you're doing.
Well, a good financial advisor certainly is going to have a steady base of clients, and they're bound to be very busy, but I think being too busy to take your phone calls or schedule regular check-ins, that can be a really, really big problem. We're talking about signs that you should be looking for a new financial advisor with Randy and Jake Floyd of Floyd Financial Group. Next one is they don't give you any kind of details.
Yeah, this is one that, and you've heard us talk on this show before, we really feel like it's important that people understand why we invest their money as we do. Now, one guy said long time ago, I don't know who it was, he said, Randy, remember, don't ever make the mistake of trying to feed steak to a goldfish, because all you're going to do is kill the goldfish. Now, what we mean by this is this. I want to give people all the information that they want and all the input that they want. I'm not going to force them to go get a Series 65 and come to work for me, okay? Mm-hmm. But we want them to know and understand how we invest and why we're doing it. So many times that people have said, well, when they start talking to them, they're talking over my head and I don't understand any of it. And so we try to really kind of boil things down and, like I said, educate people to the level they want to be educated to. But what's interesting is as we sit, and one of the biggest discoveries that we ever had, I think, in this office was we put up a whiteboard in the area where we talk about and do reviews and talk about investing, and we kind of draw things out. When you go back and you talk about, teaching people, there's the process of verbal, it's tactile, and repetitiveness, But anyway, when they see you actually do that and put it up there, not only does it spawn questions that give them more understanding, you can see the light come on, they go, wow. And I've even had people say this, that makes sense for the first time ever.
Yeah, I think also part of the reason you don't see more advisors do that is because they don't understand enough about it to draw it out step by step. And another part of it is that most advisors do not manage their own client funds.
Yeah.
Meaning, at Floyd Financial Group, we make all the investment decisions right here in-house. We do not farm any of that management out. We're not buying mutual funds. We're not hiring a third-party asset manager. We're not doing separately managed accounts from some big brokerage firm. So number one, that means it's much less expensive than the average environment because you're not getting hit by 3 different people for fees. It's just what we need to make things work here, and that's it. Versus if we look at the average advisory setup, 99% of the advisors are not managing their own money.
Right.
They're farming it out to somebody else. So when you come in and ask a question and say, hey, why did we buy this position in here? I'm just trying to understand, it's down. Why did we buy that? He doesn't know, right? Because he didn't make the decision. And he doesn't have access to those who do make the decision. And so there's always this disconnectedness that either stems from the advisor not wanting to explain it, the advisor not being able to explain it, or the advisor not having the information necessary to explain it. I think that's why most people have never really understood what they have, and we like to be the place that explains it to them for the first time if they want to know.
Science, it could be time to look for a new financial advisor. Gentlemen, the last one on the list here I think is really, really important. They don't take the time to get to know you and what your wants and your needs are.
Yeah, for sure. One of the first things that we do, and we're going to talk about this a little bit later, Jeff, is we have this process called discovery. And that's when we meet people and find out about them and what's important to them and what do they want to do in retirement and what does that mean to them and how much cash flow are they going to need. All of those things, Ben, are important. Do they have children? Is it a second marriage? Do they want to provide for a charity? Do they want to provide for kids, grandkids, college? I mean, all those things come into play when we're sitting down and devising a financial plan as a starting point for any client.
We've been talking about 5 signs it could be time to look for a new investment advisor with Randy and Jake Floyd of Floyd Financial Group. And we've talked about possibly your financial advisor not being a fiduciary. They dismiss your input. They're difficult to reach. They don't give you the details. And finally, they don't take the time to get to know you. Well, if you want a financial advisor who does not do these things, a financial advisor who's really looking to get to know you and help you with your individual wants and needs, then I got some good news for you. You can give us a call here at Floyd Financial Group, set up a conversation with Randy and Jake to get on a path towards a confident retirement. You can make this call this weekend. It's 417-889-7233. Very simple. Make that call this weekend. Leave your name, your telephone number. Ashley will give you a call back on Monday and set up an appointment for you to sit down on a one-on-one basis with Randy and Jake there at Floyd Financial Group. Once again, it's not going to cost you a dime for this conversation. This is also a no-tie zone. Very, very casual encounter there. Once again, that number 417-889-7233. Go ahead, give it a call this weekend, won't you? You can also find out more about the firm online at floydfinancialgroup.com. It's floydfinancialgroup.com. Gentlemen, time for a break. And when we come back, we're going to be talking about 10 things you should know about estate planning and more when our show continues here on 104.1 FM KSGF, where Springfield comes to talk.
We're back with your financial catch of the day, and it's a big one. Here's more Show Me the Money Radio with your hosts, Randy Floyd, Jake Floyd, and Jeff Shade.
Welcome back, everybody. This is Randy and Jake. You're listening to Show Me the Money, and in this segment, we're going to be talking about estate planning and the 10 things you should know.
And estate planning is all about taking charge of your legacy, Randy, and it's not something that a lot of people want to talk about because estate planning has to do with the time that you're not going to be here anymore, but it is a very, very important part of a financial plan. So I'm anxious to tackle these 10 steps, and hopefully we'll get them all in. The first one I think that's very important to consider, Randy, is that an estate plan covers decisions in death, but it also covers decisions, I think most importantly, in life.
Absolutely it does. Jeff, all of us would like to think that we would one day just wake up dead in our own bed.
Wake up dead, yeah.
and we haven't had any nursing home stays. We haven't had any long-term health issues. We haven't had any financial difficulty because of lack of planning, but it's just simply not true. So when we look at doing estate plans, most people think, well, that's a trust. I don't have $100 million. I don't have $10 million. I don't have $5 million. I don't have $1 million. Therefore, I don't need a trust. And honestly, it's not about how much money you have. It's about you being able to control, like we said, during your lifetime, what happens to you should you fall ill and you can't make decisions on your own. who's going to help you make those decisions and take care of you in your absence, as well as who gets what when you die. So we're going to explore this a little bit and talk about some of the pieces of an estate plan, and I think this will help give people some clarity.
Yeah, and I think the estate plan certainly does cover who's going to get your stuff, but it also covers what your wishes are going to be. So it is a very, very important part of estate planning. Okay, the next one here is going to be, many people, I think, need more than a will. Do you think everyone needs more than a will, Randy?
Well, I would say so, especially in today's world. You know, it used to be, Jeff, and I grew up in a really small community. If somebody fell on a hard time, people would want to help them and do the right thing. But I got to tell you, in today's world, it doesn't happen that way that much. It's like people are always trying to, what can I get?
Yeah.
And if you didn't plan,
right.
I've kind of got you.
That's crazy, isn't that?
It is, but that is kind of how it is. So when you look at a will basically is instructions to the probate court. So that means you're where? You're before the judge. Right. Now, there are ways to avoid probate, and you can do that through pay on death, or you can do it through a beneficiary designation of some sort. Now, I am not an attorney, but I have been working with attorneys doing this estate planning and stuff for a long time, so I'm very familiar with it. But as far as taking what I say today for you to have legal advice from me, there is no such thing because I don't give legal advice. But I can tell you a lot of the nooks and crannies and the ins and outs of this. So yes, you need more than a will. One of the things that everybody should have if they're 18 years of age and older is a durable power of attorney for finance. That basically, if something happens to make you incapacitated for a short period of time or permanently, it designates someone to take care of your finances, pay your bills, and all those sorts of things. There's also a healthcare portion of that. You need one of those as well, but those are probably the two most important documents that you can have. And a will, you need one, yes, but it is probably not the be-all, end-all as we're going to discover here as we move forward.
And as you pointed out before, will means probate, and as you said, going to probate, I mean, that's sort of like filing a lawsuit against your kids. Can you explain that statement?
Yeah, basically, in the state of Missouri, let's say that, I don't know, let's say you've got a house and you've got $100,000 in the bank, and you got a brokerage account with another $100,000 in it. Your name is on your house, and it's the only one, and you haven't gotten properly structured beneficiaries on there, and the day comes you pass away. So state of Missouri says, well, you know, we got to go through a court proceeding to see who actually gets this stuff since it wasn't set up properly to help us bypass probate. So you're going to go in there, and it's going to take probably 8 months for you to clear probate. It's going to cost money. There's statutory fees that come along with that and court costs, that sort of thing. By the way, during the time that you're waiting for probate to be settled, the assets are frozen. It really is kind of like you filed a lawsuit against your kids by putting them through a court proceeding if you don't take care of this.
Randy, if you do not have a proper estate plan and you pass away, and we know that everyone's going to pass away, who decides who's going to get your stuff?
Well, so if you die what's called intestate, which basically means you don't really have a plan, the court is going to get involved. Now, they're going to go out and they're going to look for the kids that you may have. They're going to look for brothers and sisters. They're going to look for nieces and nephews. And there's a whole hierarchy that's predetermined through the laws of intestacy. The court is going to, end up looking for those people and decide who gets your stuff. And basically, you've lost control of who gets that. Sometimes people are fine with that. I have one guy, that he said, hey, I don't care who gets it. So I don't want any beneficiaries. But, that's 1 out of 1,000 that are that way. Yeah. Most people, they have a predetermined path that they want their assets to go to. So by having a good estate plan and trying to plan to avoid or overcome some of the situations that happen in life, you need to have an estate plan that's going to take care of that.
So have a plan or the government will decide for you. Next on our list of 10 things that you should know about estate planning is beneficiary designations many times will override your will.
That's right. So if you have a 401k or you have an IRA or a Roth IRA or a brokerage account and you have what's called a TOD, a transfer on death, which is what you look at for stock accounts and things of that nature. But banks are POD, pay on death, and then 401ks and IRAs are just simply beneficiary designations. And yes, they do trump, if you will, the process of going through a will. And that's what we want to do because we really want to make it simple. Now, the problem with just a beneficiary designation is that sometimes you go to a bank and they won't allow us to put in what's called contingency plans. There's just no process for that. And so that makes it difficult if you have somebody that dies out of order. So we're going to talk more about trusts and what they can really make available to us other than a straight up beneficiary designation.
We're talking about things that you should know about estate planning, and halfway through right now, Randy, is number 5, and that's about trust funds. I've heard trust fund babies, that sort of thing. What is a trust fund, and why would one want to set one of those up?
So the trust fund baby, I like that one. I've always wanted to be one of those, actually.
Oh, yeah, me too. Are you kidding?
But basically what it is, it's a legal entity that holds the assets and divvies them out, if you will, based on the parameters built into the trust that your parents or whoever you inherited the asset from basically exercise control after they've gone to the grave, is what it really gets down to.
Control from the grave.
And so that's basically it, control from the grave. That's it.
If I had a dime for every time I heard Randy say that.
But anyway, trust funds of that nature, that's what those are about, so that it can be predetermined how assets go with restriction in many cases is what the trust fund baby or the trust funds that provide control after death are about.
Yeah, and when I think of a trust fund baby, I think of a very rich person who maybe doesn't do anything for a living. Maybe they're 20, 30 years of age. And you figure, how do they drive these fancy cars, have this house? They're trust fund babies because their parents have set them up like that. I think of the Hilton family. Next on the list is a good plan speeds up inheritances.
This is true. Now, when we talk about a good plan, is we have the thought, we put it down on paper, and we get it down on paper. Now, one of the things that we use to do that, like we've already talked about, number one is the TOD, transfer on death, POD, pay on death, or payable on death, whichever, there are a lot of different ways to say it. And then finally, there's another option called a trust, and there's two types of trust, a revocable trust and an irrevocable trust. We'll talk about the revocable trust mainly right now. So the nice thing about a trust is that it allows us to tell who gets what. It allows us to, sort of like the trust fund baby, when they get what. Let's say you're a wealthy person, you die and your child is going to inherit $1 million and they're 18 years old. Probably not a good idea to dump that in their lap. And
I guarantee it wouldn't have been for me.
in one fell swoop.
18 would be gone by age 20, probably.
Yeah, so we can build in, we'll give you a certain amount at death, a certain amount at 25, 30, 35.
Right,
you
right.
can write these trusts any way you want to, as long as there's nothing illegal built into them. So here's the thing that I would say about any time, and we've seen this play out over and over, anytime you build a trust document, it's important that that attorney that is writing that document and writing that beneficiary designation is a skilled writer and can absolutely write ironclad language in there that cannot be misinterpreted. Let me just say this. I know that there are some attorneys that buy prepackaged trust documents.
Because they don't want to have to write it.
You're exactly right. Yeah. I find that a little bit problematic. All they do is they maybe go in there and try to rewrite part of the beneficiary language.
Right.
I have to tell you, experience here is key. Having someone that has been looking at these documents for years and writing them. I have cases right now where there's ambiguous and counterintuitive and diametric language in the same trust through several amendments to that trust.
Right.
That's made it really now completely convoluted and will probably at least be mediation or court to settle.
Right.
And that's needless.
It's the opposite of what you're trying to do when you set up the trust.
Right. So don't use boilerplate forms, and everybody doesn't fit into this one little box. Next one on the list here has to do with taxes, gentlemen. Can estate planning save taxes for your heirs?
Yes, it can. Now, right now, the federal estate tax exemption per person is like $13 million. So if you're a married couple, you need to have more than $26 million to have really an estate tax problem or a death tax problem. Now, I will say this. There are some exceptions to that rule, and there probably will be more exceptions to that rule looking forward. There's some credence to doing estate planning sooner than later, because especially right now, with the death tax being set so high, we can partially transfer assets and maintain some of that estate tax exemption, because as the future unfolds here, and I can't imagine the estate tax exemption would go higher, it's probably going to go lower. There might be some credence to getting it done now while it's really, really high, and you can avoid potential taxes if you're a wealthy couple.
Yeah, you might be aware, Jeff, of the ongoing debt problem we have in this country that we're going to have to pay for at some point.
Heard something
the chances
about that.
of, dead people don't vote, so it's easy to take money from them. I agree with Randy that it's likely that this threshold will come back down, although nobody really knows, but it's going to come down on its own in 2026 if we do nothing.
And the next one has to do with online accounts and pets. We'll lump them into the same segment here. First of all, online accounts, I think it would be a very wise idea to have some sort of a document somewhere that would have usernames and passwords.
Yeah, that's probably something that is pretty smart, especially in today's world. Everything has to have a two-factor authentication code, too. So think of this. You better have the right cell phone, because otherwise you're not going to get in without going through a bunch of hoops. And of course, your trustee, if you passed away and you have a trust, can eventually get through that, because most of the financial institutions today require what's called a certification of trust that you put on file when you have something that's owned by or the trust is a beneficiary thereof. So it is interesting that we have these new little twists that we have to consider. I'm just glad that Jake and Elizabeth are my trustees, and I know that they're going to be in the know to take care of this however it comes about.
Many people also have pets these days. Certainly people have had pets for years and years, but they're increasingly becoming part of the family. Can you set up what you want to happen with these pets the same way as you would for children?
Yes, you absolutely can. The thing that I would tell them is just remember that the lifespan of your pet is not like your children. So be sure that you differentiate between your pet and your children when you write your pets and stuff into these trusts. I understand some people have never had kids, and those are their kids.
Absolutely.
And so, we don't want to discount that at all, but at the same time, we need to bear in mind, again, with a boilerplate document, you never know what you may end up with.
Right. Next one has to do with lawyers and online services. They can prepare documents for you, but there's a difference between an online service and doing it with an actual estate planning attorney, I think.
There's a lot of difference. And again, it's going to come down to this thing called experience. You go out and say, oh, yeah, okay, they've got my power of attorney there. I see that. I see they got the main body of the trust document, and I'm going to go ahead and tell them about my beneficiaries. But what they haven't done is that they haven't sat with you. They don't understand your family dynamics, maybe. They potentially don't know that you've already given one child $250,000. Got to factor that in. And how do we factor that in? And oh, by the way, we got a $1 million house and a $1 million portfolio. Who gets what, and how do we divvy that up? And you're not going to get asked on those, and you're not going to think of all these things because you just haven't been down the road yet. And with an experienced attorney to draft these documents, they're going to point out and talk about all the caveats that are normal, and then the ones that they have seen that nobody could foresee short of experience.
We're talking about 10 things that you should know about estate planning with Randy and Jake Floyd of Floyd Financial Group, and I'll just mention the last one here, and that is to review your plan on a regular basis. Don't wait until 20 years down the road and your plan says you got one kid, and when in reality you've got 3 kids. So review it on a regular basis and make sure that it is updated. If you'd like to sit down with Randy and Jake at Floyd Financial Group, talk about your estate plan and what you want in those documents and make sure that they're right, we're offering a no-cost, no obligation, and no judgment financial review with Randy and Jake at Floyd Financial Group. You get yours by calling 417-889-7233. 417-889-7233. It's a no-tie zone. It is a casual conversation between you and Randy or Jake to get you on the path towards a prosperous and a confident retirement. So what are you waiting for? 417-889-7233 is the number. You can also find out more about us and request your plan online at floydfinancialgroup.com. It's floydfinancialgroup.com. Time for a break. Randy and Jake, when we come back, we'll talk about the 5 steps here of financial planning when our show continues here on 104.1 FM KSGF, where Springfield comes to talk.
Ready to climb a mountain of financial know-how? Good, because it's time for more Show Me the Money with your financial Sherpas, Randy and Jake Floyd.
Welcome back, everybody. This is Randy and Jake. You're listening to Show Me the Money, and in this segment, we're going to be talking about our 5-step process that really applies to any financial decision, but the 5-step process to help you get retired and stay that way.
That's right. And for those people who do call 417-889-7233, and they're wondering, well, if I have the initial conversation with these gentlemen and I go forward, what's going to happen? So this is the 5-step process that should explain it all. Right at the very beginning, when you have the first meeting with you guys, what is the first thing that you do?
Well, the first thing we want to do, Jeff, is get to know that person or that couple and find out what their needs are, what their goals are, really figure out, that gives us a general direction as to what they're looking to do in retirement. Plus, we just want to learn about them. You can't go in and take one size shoe into a room and expect it to fit everybody. And so it's the same way here. We're going to have to meet people where they are and understand their unique circumstances. And that's a very important part of getting a retirement plan started.
So this is what we call the discovery process. And as you said, it's not only just about what you have, but who you are as a person. What are some of the questions or some of the things that come up in this discovery process?
Yeah, for sure. So, we're going to talk about family. We're going to talk about, you're never supposed to talk about religion, money, and politics, right?
Right.
Let me just tell you.
What else is there to talk about?
People always want to talk about those things. And
it
that's okay.
just comes up. Yeah, sure.
So we're okay with that. I think that, during this process too. So we're learning about children. We're going to learn about where they worked and how we grew up, where we worked, how we worked, gives us our perspective in life, right? I mean, it's what we have to draw from, our experience.
Environment.
And so we want to know about them and what's important to them. And hey, do you want to spend a lot more money on the front end traveling while you're you're young and you're still good looking, or do you want to wait until you're till you're later in life and you're really good looking?
Still good looking. Are you kidding me?
Yeah.
So that's the discovery process. And I understand sometimes, Randy, that can take a while with you because they'll bring up a name. You know that person. You bring up a name. They know that person. And you have all of this stuff. And then it gets to a point where there's sort of this awkward silence. And then somebody says, well, I guess it's time to get down to talking about this scary money stuff, huh?
That's exactly what happens for sure. I've been bumping around with other people on this planet for a long time now. So
right. There's no reason that this process has to be scary. There's no reason that money has to be scary. I mean, that was that one person who told you that it was time to talk about the scary money stuff, but I'm sure that once you explained it all to her, that it took the scary out of it. So we're talking about the 5 steps here with Randy and Jake at Floyd Financial Group. So the first one in the first meeting is going to be discovery. We're going to find out who you are and what you want to be in retirement, sort of lifestyle planning. The next one has to do with analysis. What is involved with that step?
Sure. So the analysis part is they come in, they say, hey, we're wanting to do some retirement planning. And so we're going to say, well, when do you think you want to do that? And what does retirement mean to you? And do you want to fully retire? Because today we have people that end up working part-time for quite some time after they leave their main job. And so at this point in time, we're going to basically be looking at their numbers, talking about Social Security, and helping them kind of get an idea of where they are, right now today. And do we need more time? Are we ready now? Once in a while, I have somebody come in and we'll get to the end of like our first or maybe our second meeting. I'll look at them and say, honestly, if you were to stop working, you would have as much money or maybe slightly more than you have now, only you wouldn't have to report anywhere. They go, really? Anyway, that's what it's about. It's about basically just assessing where you are, where we're going, and how soon we're going to get there if we're not quite there. And then we use just a variety of tools and assessments that are out there to really determine what's best for that client and their particular case.
So the first one is discovery, the second is analysis, and then if the light is still green and we move forward, then comes the planning aspect. What's involved with that?
Sure. So when we do planning, like we've already talked about earlier here, during discovery and analysis, we have learned that not everybody is the same. Imagine that. So we are looking at what that person or that couple's unique situation is and how to develop a plan that not only gives them the income that they need for their lifetime, that meets them with their risk tolerance and gives them that feeling that, hey, everything is going to be all right. And we use all kinds of proven strategies and effective solutions that over the years we have used over and over and over. And we blend those in a custom fashion for each couple. And no two are exactly the same, ever. They're uniquely theirs based on their situation.
And in the earlier part of our show, we talked about when it's time to look for a new financial advisor. And I want to talk about this in relation to this planning aspect of this. If you go through this and you present this out to the people or your clients, do they have the opportunity to chime in and say, well, I don't quite understand this, or I slightly disagree with this? I mean, really, this is a give and take situation. It isn't just do what I say.
It absolutely is. So it's kind of like if you were going to go build a house, and you go to the architect and say, hey, I want this, I want this, I want that, I want this, I want this, I want this, I want that, and then he comes back with the initial plan, and you go, okay, I like the number of bedrooms, I like the swimming pool out back, I like the sauna, I like the full-time maid's quarters over there. I'm just kidding. Whatever it is, but I would really like to change this, that, make the pool bigger, make this bedroom smaller, make that shower larger. Those are the things that, yes, during planning, there's a lot of flexibility in here, but we have to have a place to start from, and we're going to start with a sound base, and then from there we'll make the tweaks that are appropriate for each client.
Okay, so again, that theory is it's your money, let's keep it that way. You always have a say at Floyd Financial Group in your financial plan. So next one on the list is going to be implementation. We've decided that the light is still green, we want to move forward. So how do you go about implementing all of these plans?
Sure thing. One of the things I would like to say on the planning stage here is this. We don't ever put the big thumb on people and say, all right, are you going to do this or not? It just never works that way.
Right.
What ends up happening is we've had a conversation. Okay, so what's the next step to get started? Well, many times that leads us to number 4, which is the implementation process. Sometimes people are a little bit ahead of where they need to be to maybe change anything. Maybe they got all their money going into a 401k or something, but generally it's implementation time. That's item number 4 or step 4. And once we've decided to do that, what we're going to do is really make sure they understand exactly what we're going to do, and then we're going to take over and just make it easy. So if there's phone calls that need to be made sometimes to 401k companies, or if we need to go out online to transfer and rearrange monies, we can do that. We'll just make it easy for them, and we'll take them through the process to get it implemented. Whether that's immediately or if it's somewhere down the road, we'll have a plan in place to systematically build that retirement plan to its fruition when they actually pull the plug and walk out the door for the last time.
And if somebody is moving to you from another financial advisor, do you help with that breaking up? I mean, do you help with a Dear John letter? How does it work?
We will, yes, absolutely. I mean, it's one of those things where sometimes people say, well, you know, I've been with this person for a very long time and they've really been good. The thing that I would always say to people is everything has a season. You know, when we are just in life, we have a season, right? So we're kids, we grow up, we get married, we have kids, they have kids, we become grandparents, and, you know, we run through different seasons in life. And so it's the same way in your financial life. When you first go to work, you don't have many assets. After you've been working a while, you start to develop assets and all this stuff. You get a house, maybe you get another house, maybe you build a business. So life is always changing. And so this is just generally another step in a life change. And so, yes, we can help with a breakup letter if people want to do that, by all means. But we're going to make it easy. And, you know, once in a while, we lose a client here. Sometimes it's because people move. Sometimes it's because their circumstances have changed, or maybe their brother-in-law got in the business, or, you know, whatever it is. We're here to help any way we can with implementation.
So it's business, it's not personal. And the final step here is going to be review. What is involved with the review process, and how often do you do it?
So the review process is different for each client based on what they really think their requirements might be. So a lot of times we're going to have 90-day reviews after we first set somebody up, and maybe then another 90-day review. And then after a little while, you know, they're going to say, well, you know, maybe we can go 6 months. And we'll say, fine, that's okay with us. You know, we have some people that we've had as clients now for going on 20 years, and we see them once a year, but they also know this. They can call us any day and reach us and have a conversation. And maybe it's about, hey, I heard this. Is that true? Tell me what you know about that. I mean, I heard so-and-so, you know, did such and such or whatever. How does that affect my portfolio? How does that affect my income? Is that going to affect my income? Is that going to affect my portfolio? They know they can do that stuff at any time. Also, if they want a snapshot of all their accounts, we can put that together for them at any time. But the biggest thing is we want people to stay connected to what we're doing, why we're doing it, and feel connected to their money and us as their advisor so that we're all on the same page. I just think that's so important. I just can't tell you how important that truly is to each and every individual. And I know the people listening out here that meet with us all the time are going, yeah, you know, I typically always feel better and connected after I've sat with Randy or Jake.
And Randy, before we go today, I think there are some people who are probably listening to this going, well, I don't have enough money to deal with Randy and Jake at Floyd Financial Group. They only deal with millionaires. Is that the case?
No, that is not the case. We don't have to have $1 million to come here. We like to meet people where they are. There are certain levels of assets that make it harder for us to deal with. You know, if we're looking to implement a truly comprehensive financial plan, We can't do it with, $1,000 or $2,000 or $5,000.
Right, of course.
It takes more money than that for us to even build portfolios properly. But I would say this, don't let your lack or what you feel might be your lack of assets deter you from giving us a call. We can certainly have a conversation and help guide and direct you down the path that'll maybe get you to where we can help you one day, or we can say, hey, we'll help you kind of negotiate where you are a little bit so that in the future, maybe we can work together as you get toward retirement.
So don't be afraid to call. As Randy has said many times in this program, we will meet you where you are. So the 5-step process at Floyd Financial Group is discovery, analysis, planning, implementation, and then finally review. If all this sounds good to you and you want to get on a path towards a confident and possibly a prosperous retirement, we invite you to give us a call here and request your no cost, no obligation, no judgment Floyd Financial Group Financial Review. It's not going to cost you a dime. The price is right. 417-889-7233 is our telephone number. Feel free to give that number a call this weekend while you're thinking about it. Leave your name and telephone number. Ashley give you a call back on Monday, set you up an appointment with Randy and Jake. Or, of course, if you call during the week, you can talk with Ashley. 417-889-7233. Give that call this weekend. As I said, it's not going to cost you a dime. You can also find out more about the firm and request your appointment online at FloydFinancialGroup.com. It's FloydFinancialGroup.com. Happy Easter, everyone. Thank you so much for making us part of your weekend, and remember the true meaning of Easter. For Randy and Jake, I'm Jeff Shade. Have a great weekend. We'll talk to you again next week with another edition of Show Me the Money right here on 104.1 FM KSGF, where Springfield comes to talk.
The information provided in the preceding program is for educational purposes only and are not intended as investment advice for any individual or entity. All information contained herein believed to be from reliable sources. However, we make no representations as to its completeness or accuracy. The opinions expressed are subject to change without notice and do not constitute financial, legal, or tax advice. Please consult your financial professional before executing any financial strategy. Financial planning offered through Floyd Financial Group, LLC, an investment advisor registered in the state of Missouri.